Hello everyone, welcome everyone in this video. You are watching this video on CurrencyHacked.com. My name is Seeba and I'm chief editor at CurrencyHacked.com. Mm, it's always that I'd like to again thank you for your time that you've been watching our video in CurrencyHacked.com. Uh, if if you are new over here, that in CurrencyHack.com we've been giving you the video, most of the time video, and sometimes the article, uh, and the some other materials regarding to the stock and the financial market, and of course the business, which will help you to take a better decision if you wanted to either invest in the stock market or cryptocurrency. We've been giving you the the video from the say last few months about the intelligent investor, and now we are in the chapter 3, and obviously as you can see in the video that today I'm going to talk about the chapter 3 of the intelligent investor, which was written by the Benjamin Graham. If you don't know about him, he is the most respected person in the investment field. He wrote the book Intelligent Investor, including two more, the security analysis and the interpretation of the financial statement. We think that Intelligent Investor is the most important book if someone wanted to jump into the investment field, because we have seen a lot of people who read the one article in the internet today, and they just jump into the stock market, and they are hoping to make a lots of return because they read in the article. And we know that in the market there are millions people, we can say that they wanted it easy money, we can say that, and free money same. And we let me tell you one thing over here, that the money cannot be generated in the air, something like in the air. There they if someone invest in the stock or share market, they should know that they are investing in the business, and they are they own a piece of business or a whole business. They might buy a whole business or a piece of business, it doesn't matter, but whether if they invest in the stock or share market, they are investing in the business. So it's amazing to see that the lots of people are trying to make the money out of their business. They invest today and they wanted the money tomorrow, and we don't know, we don't see any business that if they put 1,000 bucks, maybe we don't know, whatever money today, and they wanted a millions of dollars tomorrow. They must have a business, that kind of business which will generate the millions of dollar tomorrow if they invest today, and that way they can they can get the return on their investment. We don't know, and we think that this way people will lose the money, then 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 getting the lots of return on their investment. So it's not easy, we can say that it's took time. From the last 4 years, 4 years of my experience says that the investor should buy a stock either in the cryptocurrency in the cheap price, and when there is a say panicking, or there is a public is in the depress, in that time they can get in the cheap price, and when the market is optimistic, in that time they can sell the cryptocurrency or stock. By this way they might be able to get some return on their investment. And there is a the temptation involved it, and they have to take a rational decision on the investment. Let me tell you over here that we are also not perfect on this area. We've been also we've been also learning about it, and then our experience says that the investor should, if they don't have enough time to research about about the stock market or cryptocurrency, they might want to invest in the good company which has a long record of the dividend, they might want in the depression period, they might want to, in the, let's say, public in the depression, say COVID-19, when there was a panicking, and their public was in the depression. In that time, they might buy the, good company, something like the banking stock, say it's a Commonwealth Bank of Australia, CBA, in the, say, $55 per share. Now it's selling at $80. What I'm trying to tell you over here is that the if investor, whoever want to invest either in the cryptocurrency or stock, they wanted to buy in the cheap price, as much as they can. And one things I can tell you that, if investor have a discipline and he can wait, say, 6 months, 1 year, or maybe more than that, then he can get the good companies share or good cryptocurrency in the cheap price. So let's move to our today's topic. In today's video, I'm going to talk about the chapter 3, century of the stock market history, the level of stock prices in early 1972. This was from the, the intelligent investor. And as I've told you that in most of the in this video, I'm going to talk from the book, because um, it's been a half a decade, uh, say half decade that this book was written by the Benjamin Graham, and we think it's still, it has the book is very useful if someone wanted to jump into the stock market, because the intelligent investor only don't talk about the math. You might not get the lots of formula, but you will get the how human psychology work, and the market fluctuation of the the stock and everything, and obviously the business value, how we can value the business, and how we can basically, how you can get the stock in the margin price. That way you can minimize your risks, to lose your investment, and maximize your return. So let's move to the next slide over here. It's me in the right hand side, Siva Prasad Bandari. And if you have any feedback, or if you want to contact us, you can always send us email at info@currencyhack.com, and you can personally send me an email at siva@currencyhack.com. Uh, and let me tell you one thing, that before invest in the cryptocurrency or in the share market, you have to do a lots of research, and the lots of study, plus you should have a discipline. And one things I like to tell you, that never invest money that you can't afford to lose, because there is always possible that you might lose your part, or maybe a whole amount of your money. So that you should consult with your financial advisor before you take any decision in the financial market. Here we are trying to give you the only idea, and this should not be take a the advice or something like this. You must do your own research. So let me go to the another slide over here. Market history, the level of stock prices in early 1972. In this video, most of the time I'm going to talk about the American market, the DJIA and the S&P 500, and this video might also help you to get either in the Australian market or some other market, because we know that it doesn't matter whether you are living in Australia, or Europe, or Asia, because we know that there was a speculation, and there was a depression, and there will be the depression, and there will be the speculator and speculation in the cryptocurrency, or either in the stock market. So let me read this paragraph over here for you. The investor's portfolio of common stock will represent a small cross section of that immense and formidable institution known as stock market. Prudence suggests that he have an adequate idea of stock market history in terms particularly of the major fluctuation in its price level and of varying relationship between stock prices as a whole and their earning and dividend. With this background, he may be in a position to form some worthwhile judgment of the attractiveness or danger of the level of the market. It is period itself at a different time. This paragraph will tell you about about it, because let's say if you see the history, and then if you see the say in the DJI or S&P 30% discount, then you might get an idea to buy the the index fund, or maybe the some other the good common stock in the margin price, by seeing the fast. And the things is, in the fast we can see that the stock market has crashed, and then after few years it's also recovering, what recover from its depression period. So what we can learn from it is that if we buy the stock or cryptocurrency in the depression period, in that time we can get in the cheap price, and then it will recover soon, and then you can get the return on your investment. uh, by this way you can form a the idea whether you want to buy or whether you want to sell the stock or cryptocurrency, whatever it may be. So let me go to the another slide over here. um, Here we have a stock market swing between 1871 and 1971. Let me show you the picture. I might have some. Yeah, here. Okay, we have a picture here. We can see that uh, um, we can see the market swing of the of the um, S&P composite. And now we call the it before they call the Carl's Standard 500 composite, and we have a DJI, a Dow Jones Industrial Average. If you don't know about them, Dow Jones Industrial Average is the uh, I believe that the top 30 big company, technological company in the America, and the 500 S&P 500 is the top 500 company in the America, Standard and Poor. So this figure should show you the the market fluctuation, what was happened in the past. We can see over here that the standard and poor was a decline in the 1885 28%, and then again it recovered to the $5.90. And here we can see that the great depression in say 1929, sorry, 1932, the standard and poor was declined 86%, and the DJIA was declined at 89%. This, and after that the stock was recover in the say $32. It was in $32 in S&P on the in 1929, and it's recover on 1955 to the 49. So by this way we can see that there was a depression, and there was a cross crash in the stock market. And after few years it recover, and there was a very big say very big depression time. We can say that from the 1932 to 1955, it took 25 years to recover from the ground loss of the 1922, to recover to the the level where it was before on the 1922. By seeing this the history, we can tell you that there might be another big depression. We might not expect the 1932 depression, but we might be able to see the say 28% decline, or maybe 30% decline in the stock market. uh, Either it might be in the S&P or DJI Dow Jones Industrial. So by this history, what we can tell you is you can wait till a few years sometime the market will be depressed. So in that time there might be a discount 30% or maybe 40% in your in the cryptocurrency or maybe in the stock or S&P Standard and Poor and Dow Jones Industrial. In that time you might be take a you might make a decision to buy them because they are very cheap, and then it might recover soon because it was recovering the fast every time when the stock it was stock was crash. Every time it was recover, say within a few years, most of the time within a few years, but the ground loss of the 1932, it took 25 years to recover it. So you might make a better decision by seeing the history. So let me go to the another chapter here. If you have let me tell you, if you have any question or have any any feedback to us, you can always give us a feedback on our YouTube channel. You can send us an email, or you can send me personal email to me. And we can see that in this image we can see the Standard and Poor stock prices index from 1941 to 1943. Sorry, it's from the 1900 to 74. It give you the 75 years of the price, and we can see that on 1932 there was a market crash, and it went down to this 4.4 dollars something like this, and it's almost like 86% as we see before, and then it took it took say 25 years to get to go to the same level when like same level of the price where it was before on 1932. By seeing this chart, what we can say is that the best time to buy a stock is when the market was in the depressed period. So let me give you the recent example. You might want to you might you know you might want to buy in the COVID-19 depressed place when there was say I think there was a 30% or maybe 25% discount in the S&P or the DJIA. Those are the index fund of the Americas, and if you believe in the Americas business or America, then in that time that can be a good to buy, and you can form the idea then this is the good time to buy because I've already got the discount. And it might be recover, and it's already recovered. So that's the standard and for this is the recent example for you. So let me go to the another mm, mm, slide over here, and let me read the one paragraph over here which is a certain fascination to us. This period saw a complete debacle in a host of newly launched common stock of a small enterprise, the so-called hot issues, which had been offered to the public at ridiculously high price and then had been further pushed up by needless speculation to level little short of insane. Many of these lost 90% and more of the quotation in just a few months. Uh, in this paragraph, what we can understand is the IPO or ICO might not be good to buy because of the fact that the it's already in the high price because we believe that the bank issue the ICO IP initial public offering ICO, and they it's favorable for the seller and it's not favorable for the buyer. And um, there are lots of IPO available, say thousands of IPO, and it's hard to find the the good business in the IPO. But on the other hand, we can see the thousands of business in the stock, say Australia stock exchange or the in other places. Which is already listed in the stock market, and then we might want to see the history of those stuff to whether they are the better purchase or not. Most of the time, it's this paragraph is trying to tell you that the most of the time IPO is not good to buy because one or two, let's say the the American stock exchange or the Australian stock exchange mm, mm, have a thousands or maybe 2,000 or let's say whatever IPO in the stock markets. It's hard to find the good business from them, and then it's favorable for the seller and the not less favorable for the buyer. And the idea is that they buy a good business in the depression phase. That's the idea, and we also argue to not to buy the initial public offering. uh, because you might get those business later after few 2 or 3 years in the cheap price. And the recent example is the cryptocurrency. Um, it's been 4 years I have experience in the cryptocurrency, and on 2017 there was lots of ICO. We call the ICO in the cryptocurrency initial coin offering, and there was thousands of initial coin offering in the 2017, but I believe 95% of them was already they gone from the market. So it's better to invest in the good company which is already listed, and when you get in the bargain price. So let's move to the next paragraph here. Same next slide here. Yeah, and then let me read this paragraph here for you so that you can get some idea uh, about it. Investors should not conclude that the 1964 market level is dangerously merely because they read it is in this book. They must wait our reasoning against the contrary reasoning they will hear from most competent and experienced people on Wall Street. In the end, each one must make his own decision and accept responsibility. Therefore, we suggest, however, that if the investor is in doubt as to which course to pursue, he should choose the path of caution. This paragraph is also very interesting because let's say if you want to invest in the S&P Standard and Poor's or DJIA, and if you don't know what to do, then you should choose a caution path because you don't know what's going to happen. Say, let's say in COVID-19, you saw the 25% or 30% in margin price in the index fund DJIA or S&P. I don't know how much discount. It's just an example for you. And then if you think it's you get the good discount, you can buy it. And if you don't know what to do, you might stay away from it, and you might be cautious about it. uh, that's the things this paragraph are trying to tell you. Again, if you have any question or feedback, you can send us email or you can comment on our YouTube channel. That's fine. Let me go to the another slide here. And uh, can such heedlessness go unpunished? We think the investor must be prepared for difficult time ahead, perhaps in the form of fairly quick reply of the 1969 to 1970 decline, or perhaps in the form of another bull market fling to be followed by mere catastrophic collapse. What this paragraph is trying to tell you is that the the stock market cannot be predictable, and we might see the big depression followed by the bull market, or maybe we can see the another decline or another very very big increase in the stock market. uh, yeah, that's the things this paragraph is trying to tell you. Let me go to the another slide here. Yeah, that's all for today. Again, I would like to thanks everyone uh, for watching our video here in CurrencyHacked.com. And if this help you, don't forget to subscribe into our channel, and don't forget to follow us on Twitter, and don't forget to obviously go to our Facebook channel to get the same videos. Um, in the future video, I'm going to talk about the how I get the say. Uh, I haven't calculated, but maybe 200 to 300% return on my cryptocurrency, and how I did the 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 dollar cost averaging and how I buy the cryptocurrency and everything. Uh, if you want to help us, we have an option as well, because it's really important to give you the give everyone a the best finance education, to take up to to give you the best the financial education which will help you to take better decision, either in the investing or the the in the business, uh, so that uh, we will continuously generate the uh, finance related material to help you. Mm, if you wanted to help us, let me tell you that if you are using the Brave browser, you can always go to the Brave browser, and you can you can go to our website here, www.currencyhacked.com. You can go to our website, and we are already verified publisher in the Brave. Uh, if you don't know about the Brave browser is also the uh, the browser which is created. It's Chromium based, but it's faster than Chromium according to the website, and uh, you can help your publisher to make them say better better content or something like this. We are also the what we call the let me show you, very publisher. First, you can give us a tip on our site, and send to our website. You can send a tip. You can click the tip. Uh, I'm gonna show you, and it will give you uh, this the user interface, and you can select the basic attention token how you want to you want to help us, so that we can create the video like this, and I help most of the people to take a better decision in the investment field. And you can click here, and you can click the send a tip in the in our website. And remember that you must have a uphold account. In uphold account, you can store your basic attention token and the more cryptocurrency. So that's all for today. Don't forget to comment, and don't forget to give us a feedback into our video. Thank you very much.